So in this video, we are going to hit 4 points for you. First of all, having a plan, a strategy in place. Second of all, we're going to talk about multi-generational planning and things you might not have thought about when it comes to using that multi-generational side of things. And then thirdly, we're going to talk about leaning into us as a team of experts and how we can help. And fourthly, why it's important to fill it out every year. Hi, my name is Lauren DeVries. I'm the Client Experience Administrator here at Entrust CPA, and I'm joined today by Rachel Ray, who is a staff accountant here, and of course you know John Sluice, who is our president. Today we're talking about the FAFSA, and it hits close to home for John and I. Each of us has a child in their junior year, and we've got other children coming up soon after, so we're in the trenches with you. And Rachel's already gone through it once with one of her children, or two. One, mm-hmm. Yeah, okay. And so she's done a deep dive for us into what the FAFSA is now. For us, 20 years ago it was a little different. Our parents got an expected contribution number. They were told how much they were supposed to pay, perhaps for many of you as well. And things have changed. So Rachel's going to go over that for us. We're going to talk a little bit about planning and strategy. We'll talk about multi-generational planning and how that can be helpful. And then kind of talk about how you can lean into us as experts. And finally, why it's important to fill it out. So I'm going to turn it over to Rachel to give us a little bit of an overview.
Thanks, Lauren. Basically, just to give you kind of a big picture overview, FAFSA is an entry point for federal aid. It's grants, loans, and even work study helps. States and colleges or universities also use it for their own programs. So FAFSA is literally the gateway for these programs as well. Some of the key changes are those lovely acronyms, EFC to SAI. So it used to be the expected family contribution, and now they're changing it to the new student aid index, which, if you break that down, it's a formula, which is parent contribution plus student contribution minus allowances. Another key change is that there's no multiple kid discount. However, the parent contribution isn't split anymore, but I think it is very key from what I have researched that you can, at the university level, let them know that you have multiple kids in university or college. And then another key change is that assets matter more. So whether you're a small business owner or you own a farm, these assets are now included.
That's a big change. So prior to this new change here, business assets or farm assets were not included on your FAFSA form. Now they are. So stepping back here a little bit, why are we even talking about this? Well, we spend a lot of time talking about taxes, right, and tax planning. Well, there are other things that your finances relate to, and this is a big part of what we're actually saving for and we're doing is for college and college tuition. So it's a big part that we get involved with these as well, because you're also planning for these. Well, many of you are small business owners, and so this is a big change for you to start having to consider having the value of your business inside of the FAFSA. What does that mean, and how does that interplay? So we're seeing a lot of questions come in from that, so we wanted to hit this video here to help you plan from that point of view. Mm-hmm. But it does change things significantly for you that are business owners, as you have to start factoring in the value of your business or the farm inside of FAFSA.
Mm-hmm. Right. One other key change is that grandparent gifts are now considered safe, which means that they no longer hurt eligibility.
I'll jump in on that one. And you hear me talk about multi-generational planning quite a bit. And I think this is really, really important, and this is key. So a lot of you that are gifting for your grandkids, for your dollars, you're setting up 529 plans for them or for others. We're going to talk about it later, but there's certain strategies now that you want to do that you may want to hold off on giving the gifts earlier and retain them inside of the grandparents' assets before giving it to them, because that is a major factor. So I'm going to repeat that is assets held by grandparents are not included in FAFSA. And so again, that's a strategy and a planning tip that you should hear from this and take away. So.
Great. And then one more just overview point is that timing does matter. FAFSA begins, the opening process begins on October 1st. That does not mean you have to rush and have your application in by midnight, but it is a key date to remember, and it's super helpful to try to goal yourself to be done with the process by the end of the month.
Yeah, and especially I think when we were talking before we recorded, you were saying that the universities and even state entities
Right.
will have first come first serve opportunities that
Right.
will be impacted then by how early you
Right.
get
It's
that
not
in.
necessarily at the federal level, but it is potentially, depending on the type of funds being dispersed to students, maybe a first come first serve situation.
Yeah, so we're gonna talk about strategy now, which we alluded to a little bit, but I'll let you take it away.
So the first, I think, key thing in strategizing is to always file. There are some people that are worried about, well, my income is, or my AGI is too high. Is it worth my time? But there is availability for aids, loans, and even merit-based monies for your student that doesn't cross into whether your AGI. So it's very important, no matter where you are at, to just apply.
I get that question a lot, especially for the business owners or for individuals that we work with that have significant assets. They'll say, well, it doesn't matter. I'm not going to qualify for financial aid anyway. I wouldn't say that's true. We actually ran there's an estimator online, and I ran some things with significant assets and significant income, and it still is a factor that's there. Now, you probably aren't going to qualify for everything, sure, but there are things that still are applicable that it does make sense to apply, including at the state level and then even the institutional level. So,
Correct. The next part of the strategy would just be to know the rules, where your assets are assessed, parent versus student. 529s that are they better to be student owned versus parent or grandparent owned, and then retirement accounts are not counted, but if you were planning to withdraw from those, they may show as income.
yeah. This is where I'm going to jump in and mention kind of an aside, but I get asked a lot, well, should I hire my kids or my kids to work for me in my business? And I say we may, but we may not, because there's oftentimes unintended consequences, in this being one of them, right? So the FAFSA looks at the student's income and the student's assets at a greater percentage than they do the parents. And so it may make sense to shift, let's say, $15,000 of income for tax purposes to our kids, but then if all of a sudden they have $15,000 of income from a FAFSA point of view, then they don't qualify, right? So there are unintended consequences that we're looking at. And again, why we get involved with the FAFSA and why we get involved from healthcare now and for other things is because it all interplays. And when you make a decision on one thing, it has ripple effects into other things. So just be aware from a strategy how you set those up and what you're doing. You alluded to 529 plans or to retirement accounts. If you've ever talked with me, you'll know that I'm a big fan of Roth IRAs for kids versus 529 plans because there's strategies there where the retirement accounts aren't included where 529 plans are, right? And so there's some specific planning things that you should look at. And we're going to talk general here, and we have talked general, but do hear from us that it is something, just like we talk about retirement planning, you should be planning for the FAFSA and thinking about how you're structuring and what you're setting up. And we can talk to you about that, and we can work through with you on that in your specific circumstance. Again, what we're going to recommend for you might not be what we recommend for someone else because of the facts and circumstances, but you should know your plan within that and how it should structure for you.
And I'll jump in and say a couple years leading up to it, not just like, oh, it's October, I got to file. Just like you plan for retirement,
Right.
you want to look at it 5 years ahead. Or
I'd say a good rule is 5 years. We always say if you're going to retire, it's 5 years down the road. If you're going to sell your business, it's 5 years down the road. And in college, it's 5 years down the road. You should be thinking about it because of that timeline that I mentioned, right? We're doing 24 we're applying in 25 using 24 numbers for 26 school year. That right there is 3 years, let alone having time to make shifts and adjust and set things up. So you should be thinking about this about 5 years ago. So work our way backwards. If you have kids in middle school or grandkids in middle school, you should be thinking about it now so that you can structure it again. Now, I'm not saying that we're going to go in and revamp everything you have solely for the FAFSA, because it does interplay with insurance and income tax and other things. But it is a big consideration that we want to think about for you.
So all of that was a good segue for talking about multi-generational planning.
Right.
Yeah.
Right.
If you want to go into that a little bit.
I just think that we need to think long term and align college funding with even family wealth planning.
So when I'm talking to I'm going to say the grandparents of the generations, right? So you've accumulated your wealth now. You're looking to start spending it, and you want to start gifting it to the kids or the grandkids even. And so as you start doing this, the old adage was put a 529 plan in or gift it over time to the kids or the grandkids. What I'm saying now is you may want to hold it in your estate, in your income, or your brackets. So again, so in a 529 plan, you are the owner with a designated beneficiary, and you do that for as long as you can inside of your accounts, not shifting it to them. Now, there's consequences with this, right? So if you're going to talk big dollars, at the end, we have to think about gifting and gifting limitations in a given year. But the overall strategy is if you are in the grandparent generation thinking about giving dollars to the grandkids for tuition, hold off until the year they need it after they've applied for FAFSA. So that way then when they apply, they can fill it out honestly that they don't have those assets and they don't have those resources, and then you can then gift it over to them. A few other strategies specifically related to 529 plans, and again, this is in the details, and so this is a general recommendation, not your specific situation, so we should talk about it. But a consideration would be to put the 529 plan, maybe you're the parent or you're the grandparent, you put it in your name, you're the account holder, and you designate the youngest child as the beneficiary, because you can change the beneficiaries of where they go to over time. So I'll use, you all know me, right? I've got 5 kids and they range right now from 9 until 17. So strategy for me would be to put it a 529 plan and name my youngest son, who is not applying for the college right now. So when I'm filling out the FAFSA forms, it's not in my daughter's name who's going to be applying for college, but it's in my younger son's name. And so that way you could do that, you apply for FAFSA, and then you switch the beneficiary afterwards. So again, it's a strategy that's a very specific strategy, and I'm saying this in general. One of my soapboxes is getting kids to save and having them and educate them and learning them, right? So having them have investments. Now here for FAFSA is something to consider that you may not want to do that. Again, I'm telling you from a sole FAFSA point of view that you may not want to have investments in your kids' names because it accounts in their FAFSA at a higher percentage than if it's in your name or the grandparents' names. Again, this is one of those where I say it in general because you're not going to hear me say that you shouldn't have your kids save dollars and learn about education. But what I am saying is maybe some dollars that are greater assets, right? So you talk about, well, I want to shift $100,000 from my name into my grandkids' names. You may want to hold off on doing that because of FAFSA. Now, there might be reasons you want to do it as well. Again, there's push-pull things that you should look at. But in general, understand that investments and assets held by college-age kids who are applying for FAFSA have a greater impact on the financial aid role and the calculation than they do in the parent's name, and then even less so in the grandparents' names. So
Well, that's a good segue too for our next point, which is you want to lean into your team of experts here at Intrust.
Our firm can help with reported income and asset strategy, like John has been talking about. Income is the biggest driver of aid calculations, but assets matter too.
on both of those, again, so why are we even talking about FAFSA? We talk about retirement a lot, we talk about selling businesses, but we also talk a fair amount with our clients about financial aid and FAFSA. It's a big expense. It's one of the single most expensive things that you're going to do in your life is pay for your kids' college tuition, and so it is a big factor. And so planning around that and knowing that is something that we live and breathe inside of. So we're here to help through that. Oftentimes people assume, oh, you just do taxes or you just do other items, right? But no, we do this as well because it is a big part of what plays on your costs overall, and it factors into it. And we can, if nothing else, we can help you, give you the information that you can help fill out the form as well. But strategizing inside of we've spent some time on the assets, but also on the income, right? So when you're going to go sell your business, you start looking at what is my income or expenses going to be. From a tax strategy point of view, you're looking at it and thinking, okay, do I want to have expenses or not? Well, you also need to think from a FAFSA point of view, right? So again, from my particular case, coming into some years where I'm going to have some kids in college, I might want to suppress my income in my business just by having depreciation at a greater rate to help on the FAFSA. Again, it's just one factor that we're considering because it has income tax factors, it has health insurance factors, and it has FAFSA factors, but it's one more thing that you're looking at to say, okay, do I want to push or pull expenses or early depreciation or other items inside my business? So.
Another thing that we can do is, we talked on it a little bit, is avoid unintended consequences. And one strategy maybe you could elaborate on is like having your child purchase a car versus
yes, that is
tuition.
Again, you heard her mention unintended consequences, and I've said this a couple times through this video, and I'm going to keep hitting on this, and I say this on a regular basis. Call it a soapbox for me. Is we can't make decisions on an isolated basis, right? There's always things that push and pull. And why I talk in general terms here, because what I might recommend for one person is be different for another person, right? So it's very important that you consider not just one factor, not just income taxes, but it has implications on health insurance, on FAFSA, or others. But here's an example where there are certain assets that are included in the kids or the students' asset base for FAFSA, and then there are assets that are not. So one example here, one specific example would be investments are included in their asset base, vehicles are not, right? And so if you look at this and you say, okay, well, given the facts and circumstances, my child has $5,000 and they're either going to pay for college or they're going to pay for a car. Well, a strategy would be that you have them take their $5,000 and buy the vehicle, and then you pay for the tuition on top of it, because now they own a vehicle which is not included in their asset base versus having you buy the vehicle and then having them have $5,000 in an investment account to then pay for college, right? So again, you got to understand your specific circumstance, but that's a very key item and a very simple thing, right? So $5,000 makes a big difference as it relates to the students' assets, because they're going to assume the assets that students have should be for college, right? So they're going to, if you're that age, you should be putting your money towards college, right? Is what the FAFSA generally assumes. Not exactly, but it's a bigger percentage, right? And so if you can put the students' assets into things that are not counted versus that are, it makes a big difference.
So our last point is just to drive home that you want to fill it out every year.
Right.
It's not a one and done. You should look at it just like your taxes. They come every year, right? Once you start doing FAFSA, you're going to have to do it every year. You're going to update it. You're going to get information. You're going to get better at it. As you're looking at it, you're going to use resources that are there, because it's not something you do on a regular basis, right? You're going to find YouTube. You're going to do other things. We're here as well. But once you do it, you're going to feel that it gets a little bit easier each time, because you're going to have some work papers that you did, because there's not that many input fields inside the actual application. For example, they're going to ask, what are your assets? One number, but you have to have the inputs to know to do that. So you're going to have to add all your investments. You're going to have to know what's included, what's not included. So you're going to spend some time researching it through YouTube, through internet, but we're here as well, right? So use all your available resources to do that. But the key here is that you do it every year, and you have to update that information every year.
So just to remind you, it's best to start in the October month of the senior year of the student. And again, it doesn't have to be done on October 1st, but ideally by the 31st. And then that also is not just for the first come first serve situations. It's also allows time to make additions, corrections. You are able to go back. It's not like you're just out of luck if you.
And I would say if you're a business owner, if you have other hard to value assets, you should be thinking about even sooner, right? I like to say this is a great thing that you should be thinking about in the summer, during the summer planning months. I know it's everyone's favorite thing to think all summer long is what I'm going to put for the FAFSA. But start that process out. Even come off tax year, you're going to have that information readily available. Just roll right into getting the information, compiling it, and having it available for when you apply in October. Because you know us, we like to plan ahead. You had a fun fact that you told me that I didn't realize you could do, and you mentioned this, and I think it's pretty important for you guys to hear as well.
When you get your financial package from FAFSA after going through all the process, you are able to appeal if you don't feel that that package really reflects your situation. So I recently heard that 80% of appeals result in additional funding to some extent.
So that's a big number. So if you get the results back and they don't seem consistent with what you were anticipating, don't be afraid to appeal that process.
Yeah. So filing consistently ensures flexibility, potentially more funding options, and the ability to respond to unexpected changes.
So FAFSA is more than paperwork. It's really a planning tool, and we recommend that you fill it out. Even if you don't think you are going to qualify, fill it out. And of course, be in touch with us if you have any questions. If you need help along the way, we're happy to help you. And thank you for watching.
Yeah, thank you for joining, and thank you for putting this together.
Yeah.
Appreciate it.
Take care.